Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Okay, welcome everyone to the Zacks Top Stock Picks for November 24th. My name is Andrew Rocco. I'm a stock strategist here at Zacks Investment Research. I also do manage the Tech Innovators Portfolio Service. And today I'll be bringing you through my top stock. And then later on, my colleague Ben Rains will be showcasing his top stock pick. So let's jump right into things here. And my top stock pick, it's a well-known name, but I think there's good reasons to own it. And that is Apple, ticker symbol AAPL. And Apple earns a Zacks rank number 3, which is a hold rating from Zacks. And of course, most of us are familiar with Apple, but obviously it has transformed throughout its long and storied history. Currently, Apple's business is primarily focused on, or I wouldn't say focused on, but it runs through that flagship iPhone product, of course. And meanwhile, the company is benefiting from the services business, which I'm going to go into in detail, which includes revenues derived from cloud services, the App Store, Apple Music, Apple Care, and Apple Pay. Additionally, we're seeing some of the non-iPhone devices, think of the Apple Watch, the AirPods, those continue to gain traction. So Apple's beginning to dominate in a bunch of different areas, including wearables such as the watch and hearables such as the AirPods. So let's move on to our first slide and talk about AI. So Apple Intelligence, this is Apple's AI efforts. And like many tech giants, it's a key bullish catalyst for Apple over the next few years. And Apple Intelligence, that basically covers Apple's on-device AI capabilities. And over the past decade, smartphones have essentially gone from wants to necessity. So if you're in any sort of business, you sort of need that iPhone. It's going to make life a lot easier, or at least a smartphone. And new on-device AI capabilities should dramatically improve the iPhone performance and value. And in my view, that's going to spark a multi-year iPhone replacement cycle, as people are going to want the newest hardware, and it will give more reason to buy the new iPhones, aside from a better camera and things of that nature. And one of the things I like most about Apple is, unlike its competitors, Apple designs its own silicon, which means that it has a structural advantage to run AI efficiently on its devices without relying on those expensive NVIDIA or AMD GPUs, data centers, etc. So I see Apple gaining more benefits from AI than many of its competitors. And at the same time, they're going to spend far less. So while competitors like Meta have spent almost $100 billion in CapEx spending, mostly on AI and AI talent, Apple has only spent $12 billion in CapEx in 2025. So again, I see Apple capturing a lot more iPhone users, and those iPhone users are going to renew their new iPhone more often thanks to AI. But at the same time, they're not going to have to spend as much as like an Alphabet or a Meta platform. So I see AI as an underrated and bullish area of Apple's business. Now let's move on to Apple services. Again, that includes the Apple Store, iCloud, Apple Music, etc. And the best thing about this business is it's a very sticky business. So once you have an iPhone, as your phone fills up with data and pictures, you're going to have to pay for that iCloud, for example. And then once you have an iPhone, you're going to most likely be buying apps through the Apple App Store, and Apple famously gets a big chunk of that. So this segment of the business is becoming a major growth engine for the company. It produces very high margins and that recurring revenue, which is the holy grail in my view. And many Wall Street analysts see this business accounting for roughly 50% of Apple's entire business in the coming years due to its large and sticky install base. So that's a very big bright spot there. And let's talk Apple Pay, which is Apple's contactless payment technology. That's benefiting from growing adoption stateside. And then Apple is aggressively expanding the service to several new markets globally, including North America, all over Europe, Asia, and Latin America. So additionally, beyond that, driver's license and state IDs can now be added to the Apple Wallet in many U.S. states. And I see that going to pretty much every U.S. state in the next year or two. So that's another reason people are going to be using the Apple Pay feature more and more. And then, of course, can't talk about Apple without talking about its massive cash hoard, which has come down a little bit, but it's still a massive cash hoard of around 55 billion, with the most recent reported cash hand figure. And Apple is using its cash to decouple from China and avoid potential tariffs, invest in R&D and Apple Intelligence, of course, or simply save it for a rainy day. So that cash pile, especially in a volatile market like we're seeing now, that cash pile can really come in handy. And then, of course, you can't talk about Apple's cash pile without talking about its massive buyback program, which has been going on for a decade plus now. And Apple has purchased back around 100 billion worth of stock in 2025 and more than 700 billion over the past decade. So share repurchase programs, they help the supply and demand dynamics of the company, because what it does is it decreases the number of shares outstanding. And with fewer shares outstanding, it also makes the earnings per share look a lot more attractive to Wall Street because there's less shares outstanding. And even if earnings stay the same, that EPS figure is going to look more favorable. And then finally, of course, the sustained demand, which has been going on, as I said, for 10 years. And you can just look at the stock price go up and up and up. The sustained demand leads to an appreciating stock price like we've seen with Apple. So that has been one of the biggest bullish catalysts. Apple did another 100 billion this year, so it's not stopping anytime soon. And then Apple, because of its vertical integration with that in-house silicon and the supply chain investments, Apple's gross margins have expanded over time, and I see that trend continuing, especially as that services business, which we talked about being very high margin, as that continues to comprise a larger portion of Apple's overall revenue. So expect Apple's margins, which are already juicy around 47, to continue to expand, 47 billion there. And then Apple consistently beats Wall Street. And of course, Wall Street is a game of expectations. Historically, Apple delivers on those expectations. And you can just look at this Zacks EPS surprise chart. Over the past 20 quarters, Apple has beaten Zacks consensus estimate in 19 quarters. So can't ask for better consistency from a expectation look there. And then, of course, we want to take a look at the technicals. And Apple, of course, because it's a large stock, it's a little bit lower beta, which is something that I want in an environment like this. If your stock is a little bit less volatile, it's going to be easier to hold. But just because it's less volatile doesn't mean it hasn't been performing well. It's actually, since that April low, it kind of just relaxed a little bit, and now it's been trending very, very nicely. And we see it pulling into the 50-day moving average, nice and calm, forming a beautiful bull flag. And the relative strength is just undeniable. Many stocks are below their 200-day moving average. QQQ is below its 50-day moving average. And then if you look at Apple, it is just trending nicely above the 50-day moving average. So I like to think of relative strength as the tennis balls versus the eggs. So in a rough market, Stocks that fall below those key moving averages, those are eggs. They crack once they hit the floor. Apple is clearly a tennis ball. Every time the market gets hit, the stock bounces right back up. That tells me that there's a lot of demand for the stock. So between Apple's cash-heavy balance sheet, its AI efforts, which are going to add to revenue with less capex than a lot of the other tech giants, and then the bullish relative strength that you're seeing, the margin expansion. There's a ton of reasons to be bullish Apple at this juncture. So again, my name's Andrew Rocco. My top stock was Apple, AAPL, and I'm going to toss it over to my colleague, Ben, who will cover his top stock. Thank you so much.
Thanks, Andrew. Hello, everybody. Ben Rains here for Top Stock Picks and Zacks. Today, I'm looking at Advanced Energy Industries, which trades under the ticker AEIS. Advanced Energy is a leader in precision power conversion and beyond for chips, data centers, and other critical growth areas. The tech firm's growth outlook has improved again recently after another big beat and raise quarter in early November, spurred by what it called increased demand for its AI data center solutions. It grew its data center computing segment by 113% in Q3. Demand for AEIS's new ultra-efficient converters has surged amid the AI arms race, with its data center segment now up 110% in the first 3 quarters of 2025. Advanced Energy designs and makes precision power conversion, measurement, and control solutions. Its various products and solutions serve customers across critical areas such as semiconductor equipment, industrial, networking, and telecommunications, and most importantly, now AI data centers. Its recent upward earnings revisions confirmed its AI-boosted outlook and earned it a Zacks rank #1 strong buy. The stock has doubled the tech sector over the last 15 years. It's up roughly 1,500%. This includes a tech in NVIDIA crushing 60% run in 2025. Yet the recent AI-driven pullback offers investors a great chance to buy AEIS stock on the dip. So now we're going to go in and take a look at some more details and some estimates and some price action and things like that with AEIS on Zacks.com and our ZRS system. Okay, we are now on our Zacks.com quote page for AEIS, and we can see, as I mentioned, it's a Zacks rank #1 strong buy here at the moment. It's also part of a very highly ranked industry, which is a great thing long term, as being a part of a highly ranked industry is a big part of your stock performance over the long run. We could see that as we record this Monday morning, it's taking a big bounce. It's up about 4.5% as investors start to slowly nibble at some of these beaten down AI stocks, as we mentioned off the top. So looking ahead, we're calling for about 19% revenue growth in 2025 for AEIS, and then another 11% growth next year to get to nearly $2 billion, up from about $1.5 billion in 2024. And then the bottom line, we're calling for a really impressive 65% adjusted earnings growth this year, and then another 21% next year. And we can see all the recent earnings revision positivity after its impressive Q3 report in early November. So we can see those big jumps. And we can see its most accurate estimates are also coming in well above consensus, and it's beat by an average of 18% in the trailing 4 quarters. We could take a look at this earnings snapshot here as well to really encapsulate this recent wave of positive earnings revisions over the last year. And we can see that it's jumped heavily, especially it's great to see for 2026 up about nearly 14% with, as I said, those most accurate estimates coming in above this $7.41 consensus, and its Q4 and the Q1 of 2026 estimates are also up significantly, which is a great sign that it's riding that AI wave that I said NVIDIA confirmed as well. So now let's go over to our ZRS system to take a look at its performance. So this is over the last 15 years, up to about 1,600% for AIS. We'll go to the last 10. See, it's up about 600%. And the recent strength in 2025 helped it finally break out above that trading range it had been in from early 2021 till about this summer of 2025. So it kind of chopped around, boom, boom, we can see it here, and then a huge breakout. So we can go ahead and take a look at our technical chart here as well. We can see that it started to find buyers at that 50-day moving average. It's holding that line there again at the moment. If we look longer dated, we can see it's still a little overheated. So we could see some more pullbacks in the near term. I can put this as the 21 week. We can see that it possibly could test this, but The exact market timing game is very difficult. So as like I said, it's already holding that 50-day. So if you want to nibble here, you could possibly see it return new highs. And you never know how the market's going to be. But if you're a longer term investor, maybe nibble at this 50-day. And if it possibly falls down to the 200-day, take advantage of that as well. And then we can go ahead and take a look at its valuation. We can do its PEG ratio, which factors in that longer term earnings growth. Let's do it next to the tech sector. We'll move this chart a little bit. So we can see this a little bit better. So let's do this over the last few years. So we can see that it's trading, despite crushing the tech sector, it's trading at a discount with a PEG ratio of about 1. So that's a solid sign there. Its valuation is not super overheated. And then if we look at its forward 12-month earnings, we can see that it's trading at a little bit of a premium to tech, but nothing too bloated or anything like that when you consider the stock is on a really impressive run. So overall, Advanced Energy Industries valuation, and it's sitting at a nice entry point if you're a technical trader, and its growth outlook is really, really sturdy and impressive, boosted by all that AI growth that we talked about up top. Overall, Advanced Energy Industries has transformed into an AI infrastructure company in a classic picks and shovels investment to capture the AI data center boom, no matter who the forward-facing winners are long-term in AI. On top of all that, it's well-diversified with an established track record of growth long before AI. It also pays a dividend, which is supported by its sturdy balance sheet. And on top of that, NVIDIA confirmed that the AI arms race remains in full steam when it reported last week, with the recent selling offering investors a great chance to start buying some best-in-class AI stocks, such as AEIS, on the dip. So that does it for me in this episode of Top Stock Picks at Zacks. Please head over to zacks.com/promo page for a look at some of our services, portfolios, and